Do you ever make what you think is a good technical trade and wonder why it doesn't work? In this video, a firm trader shares a winning technical analysis trade that will help you understand which ones are most likely to work for you. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, a proprietary trading firm located in Midtown Manhattan, and I'm also the author of the trading classic One Good Trade and the Playbook. In this video, see how adding variables like a news catalyst or relative strength or reading the tape and more can turn a mediocre technical analysis trade into one for which you can build a career around.
Okay, great. So this was an earnings gap breakout trade on JPM to new all-time highs. The big picture fundamentals behind this trade were that JPM exceeded Q3 expectations with their earnings, and they guided higher for Q4 due to strong expected fee income and net interest income. They beat on EPS by 25 cents a share, and they beat on revenue by right around almost $2 billion. They also raised that Q4 guidance, and overall analysts were very positive and optimistic about JPM on the release of these earnings news.
So very strong earnings?
Yeah, they were not, I wouldn't say they were outstanding, but they were above expectations clearly, and they were very good earnings. On the high time frame, over the last year, JPM has been in a steady uptrend. It's holding above its 100 daily moving average, its 200 daily moving average, and its anchored VWAP from 2019. And so this tells me that buyers are clearly in control on the high time frame, which adds more fuel to long setups. Now, over the last 30 days, JPM has been consolidating below this important 119 level. And today, on this day, it was gapping up to that 119 level and had put in a pre-market high of 119.39. What I really liked about this 30-day chart was that I felt if JPM could get above 119.39, it had clear room to run to retest its 120.4 all-time high. And if JPM were then to get above its all-time high, then it would have obvious room to run beyond that because there wouldn't be any technical resistance levels past that price.
Good, and I think that's a good way to set up where a potential trade is on our longer term charts before we think about trading it. So key information to know before we decide to trade a stock is, what are the most important longer term technical levels and where is this stock in relation to that?
So moving on to the overall market context, over the last 30 days, SPY has been downtrending pretty steadily, but 2 days prior to my trade, the U.S. announced a temporary trade truce with China, and that caused SPY to gap up above this downward trend line. And so, to me, what that meant is, maybe we'll see more upside fuel to stocks with positive fundamental catalysts now, like JPM, because the market may be breaking out of this downward trend that we've been following over the last month.
Okay, so we're not just trading a stock based on a technical breakout, and we're not just trading a stock based on good earnings, and we're not just trading a stock based on the overall market. And we are doing more than just making a technical trade. Okay, so we have our overall market showing strength, and for a good reason. We have the stock that we're watching potentially going to do well, and with the earnings catalyst. Okay, so important when you're putting together technical trades to layer on top of your technical trades, if you can, more than just the technical setup. If you can layer on more ideas on top of that, you can turn a mediocre technical trade that may or may not work into a really strong trade that happens to be a technical trade that really can work, that you really can build your business around, that you really can count on.
Absolutely. So, and then taking that one step further with the chart of XLF against SPY, I thought this was very interesting because since 2018, bank stocks have been consistently lagging behind the market, showing relative weakness. Since 2018, the SPY is up 9% overall, but the XLF is down 2%. And the XLF is a ETF that consists of all of the major bank stocks, of which JPM, I believe, is the second highest holding within that ETF. And so what I thought was interesting about this was that it seemed to me like a strong fundamental catalyst, such as bank stocks like JPM having better than expected earnings, may trigger money on the sidelines to get back into the banks and fill this gap between the overall market's performance and bank stocks' performance over the last 2 years.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Intraday as well, XLF was showing relative strength against the overall market at the time of my trade. At the time of my trade, you can see XLF was rallying aggressively. It was up 1% on the day, whereas SPY was also uptrending, but it was only up 0.7% on the day. And so I think this added some additional fuel to the long setup for JPM. Seeing that XLF was also breaking out at the same time was certainly a check in favor. So my morning game plan with JPM was first to avoid trading JPM unless the pre-market range was broken to the upside. The reason for this is because I'm looking for an uptrend to develop in the stock, and I don't want to be caught up in the chop of price action within pre-market range. I know that from my past winners, I'll do a lot better if I just wait for that pre-market high to break and then start getting involved. So what I did was I set an alert at 119.39, which was pre-market high that day, and that allowed me to watch for other setups and not have to worry about missing this setup while I was watching other stocks. Once JPM was to get above this pre-market high, if I saw it holding above pre-market high with a strong tape, my plan was to get long at least 2 tiers of risk, and then I wanted to take off 1 tier of risk at 120.4, which was the prior all-time high. If that level showed signs of resistance, what that means to me is large offers filling or a candle piercing above but then failing to close above on volume. And so then if 120.4 were to get held above, my plan then became to utilize 121 and then 121.5 as my resistance levels, because those were whole dollar levels, and they also matched up with traditional pivots. So market stats on this day, at the time of my entry, JPM was ranked number 2 on my in play today filter, and its stats matched up nearly perfectly with many of my best trades in the past, and to me indicated that JPM was in a strong uptrend and had much more potential upside. My favorite variables within this filter that I liked about JPM were that its RVOL was very elevated at 2.8. It was holding above its pre-market range and prior day's range at the time of my trade. It was up 70% in ATR from the lows of the session. That's very significant. And then also my big bid ask scanner was picking up multiple large offers that JPM had broken and was now holding above. And so what I've noticed is that generally the strongest uptrends have that characteristic where they're continuously breaking through strong asks and then holding above those asks without really dipping back below them once they're broken. And so that happened at 119, my scanner went off, 119.3, and then 119.35, all before I had actually entered the trade, before it had broken out a pre-market high. But I knew that with that characteristic, if JPM was going to hold above 119.4, which was in line with my original plan, then I would have that would be additional fuel for this uptrend to continue.
Tell me about your in-play today filter.
Yeah, so my in-play today filter looks for the same market stats that have been characteristic of many of my past winners over the last 6 months. What I like to see a lot is when the change low of day percent ATR gets above 60 or 70%, there's a strong tendency for these stocks to just continue in an uptrend and close near the highs. And then what I also like to see is RVOL hold above 1.5 or 2 with these stocks, and I also really like to see them holding above the pre-market range and prior days range. So you can see here I have marked whether the stock is above its pre-market range and then prior days range, and then I have this change low of day, which tells me JPM at the time was up 69% of an ATR from its lows. And I also have this change close, which is also in the percent, in terms of percent ATR, that indicated that JPM was up, almost 1.5 ATRs from its prior close price because of that gap. So by having this filter constantly running, it allows me to focus on the stocks that have the characteristics that I have like a good winning history in. And so that's something that's helped my trading out a lot.
Yeah, that's a really good job of using that filter right there for your trading.
So moving on to my execution, in the first 30 minutes, JPM held below its pre-market high, and so this was a no trade zone for me. And I watched other stocks during this period. I would occasionally glance over at JPM and notice things like the big offers filling at 119, 119.3, and 119.35, but I didn't enter any trades during this time. Once JPM got to 119.39 and my alert went off, I watched for JPM to hold above that pre-market high level. And what I noticed was that there were very large offers at that level that JPM was breaking through. And then once those offers were broken through, JPM started holding above that level, above pre-market high. And each dip down and retest, it would fail to hold below for any considerable amount of time. And I'll show you on the next slide what the tape looked like during that time so you can see what I'm talking about.
Are you saying that the reason why you want JPM to get above the opening range is because based on your study of your trading, that you don't trade well, your stats aren't meaningful, they don't show edge, if you do not wait for...
Yeah, I tend to trade very badly when the stock is within its pre-market range because I'm a trend trader, and generally when the stock is within the pre-market range, I get chopped up very badly. So for me, it is better to wait until pre-market range is broken because I see in my past results that things trend far more easily once that occurs, and I just tend to have a much easier time with hitting winners that way.
I like that a lot.
Thanks. Yeah, it's something that has definitely improved my trading a lot. So I waited in this instance until pre-market high broke, and once it did, I fought for my entry as close to 119.4 as possible when I saw that the tape was strong. And with my exits, I covered 25% of my position into 120 just to pay for the trade and cover my risk. Then I covered another quarter of the position at the all-time high level of 120.4. I didn't cover any more than that because there really was not very much resistance at that level. There was a very big offer that was taken almost immediately, and then price just continued higher without very much slowdown at all. I then took off another quarter of my position at this 121 area. There was some pretty heavy selling at that area, and I then was holding a quarter of the position up to 121.5. I took off half of that piece in front of a very, very strong offer that could not break at 121.5. And then finally, I held the remainder of the position until JPM made a lower low. And to me, that was when the trend was broken, and that meant that I had to get out of my full position. So reading the tape of my first entry, I can show you exactly what I saw as JPM got up to its pre-market high of 119.39. you can see there's a very large offer that steps in at the level. There he is right there at 54. He came in pretty quickly. He came in pretty quickly, but so I actually didn't see him there at the time. Actually, sorry, my bad. This is the wrong side. There we go. Okay, so this 119.4 offer steps up, and he comes in very quickly. I actually don't see him on the offer because he comes in because he disappears so fast. But on my big bid scanner on the left, I see that there was a 54 offer that filled at 119.4. And so the reason I built this scanner on the left is to show me a history of big offers and big bids that fill on any stock that I want. And so the reason I felt that was significant was this confirmed that 119.4 is a level that is significant for my trade. And once that level was broken above, once buyers stepped above that level, it confirmed that my long thesis was working and that I needed to get in with a limit order at that level. So then a few minutes later, after I entered tier 1, another big offer stepped in above my level at 119.45. This guy was even bigger. And once buyers filled him and the bids were able to hold above 119.45, I placed another limit order at 119.45 for the retest to fill tier 2 of my position. So those are my 2 entries for this trade.
Yeah, I think you should probably enter at 119.46 in the future and be open-minded to maybe having to bid a little bit higher if you notice something clearing a particular level.
Yeah, I agree. I had to wait. After that big offer at 119.45 got taken, I placed my limit order at .45, and I had to wait about a minute or so before price dipped back down and retested me, and I got the fill. I also feel like at this moment I really should have gotten a lot heavier because, well, once we broke through this big offer, that started the breakout. Price started aggressively moving in my direction, and it really felt like this big offer was holding price down for a few moments, and once he was gone, there was nothing stopping JPM from moving higher towards its all-time high. So these are my trade execution. For me, the big area of improvement that I am kicking myself in the foot over with this trade is that I only allocated 20% of my daily stop to this trade. And trades like these, where all of my different variables that I track come together, they happen only about once a week for me. And because they are so rare and because they have such a high probability of success, these setups deserve at least 40% of my daily stop, and ideally 60 or 80% of my daily stop. But here, like I said, I only allocated 20%. One area that I really feel like I can improve on is that in my daily morning preparation, when I see stocks begin to meet my criteria like this, I need to pre-plan what the total amount of size that I want to take if the stock continues to show me checks in favor after the open. What size will I need to be in to be 40% of my daily stop? It was difficult to come up with that in the moment, and so I ended up undersizing the position. But if I had pre-planned that in my morning preparation, I think I would have been able to much more easily take on a much bigger amount of size. And I really need to in the future, because these are clearly my best trades, and the trades that I need to be over risking if I want to be making money.
Yeah, that makes sense. And I just want to point out to the young guns in the room that, you know, this is, if we have to label this, we would label this a technical analysis trade. But you'll notice that we are not just making a trade based on technicals. And so, you know, a lot of underperforming retail and independent traders will buy a particular stock when it gets above a resistance area. And then they'll wonder why they don't work or why not enough of them work. The thing that you'll notice from this trade, you should notice, is, you know, A, we've got an overall market catalyst to drive the overall market higher. B, we've got a news catalyst in the particular name. C, we've got a pattern, an opening range pattern that works a lot as well for intraday trading that we can overlay. We notice that offers are being cleared, so the tape is strong in this particular setup. We notice that XLF is stronger than the overall market. I like your idea that, hey, maybe the banks have a little bit more to run because they've underperformed. I like the way you thought through that. And so the keys to making really good technical analysis trades are to either just have a massively significant technical support or resistance level to trade off of, or to overlay more of these variables so that you're making a technical analysis trade plus. Technical analysis trade plus. Those extra variables is what's going to cause this trade to really work. And to be a type of trade that you can think about building your career around. So we think about what are the trades we could put a lot of money into? What are the trades that could really make our week? Is this a trade that could really make our week? It is. But it's not a trade that can really make our week because it got above a technical resistance level. It's so much more than that. And when you learn to put those other things together on top of your technicals, now you're trading. Now you're able to trade with edge. Now you're going to move away from that frustration of, hey, why did that technical level didn't work? Because you're doing more than that. Does that make sense? I promise you, if you just trade off of mediocre technical levels, your results will be mediocre. If you trade off of good technical levels and have other reasons the stock ought to go up, on top of that, you'll have good results. All right, any questions any questions?
Arman, I saw on your long-term chart it says DMA. Is that a moving average?
Yeah, I had on the long-term chart 200 daily moving average and 100 daily moving average and the yearly anchored VWAP. And I used those three moving averages to frame a context of whether I should be favoring long or short setups. If something's in an uptrend, I want to see it above those levels. And I'm also checking whether the stock is oversold or overbought against those levels to see if I could be playing mean reversion setups as well.
I see that you are tracking on your volume under your chart. You have an overlay. I assume that it's the average daily volume that you're tracking, trailing over a certain period of time. Are you factoring in the slope of that average? Are you factoring in volume on the daily time frame before you're making your decision?
It's not a significant. The slope of the moving average is not a significant criteria for me. But what I do like to see is increased volume in my areas of interest at my levels to help frame whether that level is going to be important. And then I also like to use volume to determine whether or not my trend is breaking. So if we're at the highs of my trend and there's very high volume and it appears that that's sell volume, then I'll likely take off more of my position there because it increases the likelihood that my uptrend is reversing and I need to get out of the position.
What was your stop on the first two tiers? Were they like the same for like both tiers?
Yeah, let me go back and I can show you. So my stop, my true stop for this position was if JPM were to get back below 119. So I wanted to give this trade a lot of room. And something that I talked to Dr. Steenbarger about last week that I failed to do on this trade is risking a little bit of my position off of the micro consolidation. So having a stop for a quarter of my position below this like 119.20 area. And what that allows me to do is allocate a lot of size towards a tight risk reward opportunity within my trade. That way I can get very big, and then if my risk reward opportunity fails, I can hit out of that size, but then still keep my big picture idea intact. So if I were to replay this again, my stop would be for most of the position below 119, but for part of the position below 119.20 to show that this micro consolidation failed.
Now it's your turn. Which effective trading technique from this video will you try next? Are you going to start adding variables to your technical analysis trades, or only take technical setups that have measured edge for your trading? Let us know by leaving a comment below right now.